Folks, good morning. Today, I've invited Anthony Venuto from InTouch Mortgage Solutions. Anthony, welcome to the show.
Thank you very much for having me, Santo. Always a pleasure.
You know, in the past, full disclosure, we've done a lot of work together. The clients that I work with, buyers that are talking about needing mortgages and so forth, I refer them all to you to help them out with the mortgage side. So we have done quite a bit of work together.
Always appreciated. Definitely love working with your clients. Love walking them through the home buying journey. It's an interesting journey, and together with our expertise, we can help simplify the process.
Exactly. So, as you know, on all the shows that I do, a lot of the way I talk and the things that I talk about, I should say, on my shows is more about pulling back the curtain in the real estate industry and talking about things that maybe not everybody always talks about. And so I really don't want this to be a very typical agent talking to a mortgage broker type of show. I want to kind of just be able to candidly talk about what's on our mind. Is that good with you?
Let's break the mold. I'll be happy to take this conversation wherever it takes us.
First of all, it's January 2024. Are you working? Do you have clients?
Right now, beginning of the year, a lot of people, knew me, they're starting to re-energize themselves with the vision of buying a home, right? So that's generally what we see happening in January. And a lot more action is sort of happening from just 2022. Obviously slowed down. It's starting to pick back up. We're starting to see right on the ground floor a lot of clients trying to get pre-approved, revisiting their home buying dreams with the fact that the Bank of Canada's now hit that pause button yet again. So a lot of people, reinvigorated to come back out into the market, at least from our perspective.
So right now, I can tell you, and I've been saying it on all my shows, it's busier out there than it was the last 6 months. There's more showings, more people visiting open houses, there's more offers on the buying side. We've not seen really, truly a big uptick in listings. There's a few extra listings. It's just seasonal. We're expecting to see more listings, but the buyers kind of have come back into the market and are looking. So for you, talking to new clients, who would you say is your number one new client? And the categories I'm thinking of is a first-time home buyer. Is it the kind of buyer who's moving up? A buyer that's downsizing who maybe may or may not need a mortgage?
That's really a good question. I mean, we're seeing a diverse amount of applications, but if I had to take a bird's eye view on it right now, there is a lot of first-time home buyers that are coming to the market. If we want to even dive deeper into what those new first-time home buyers look like, they are generally newer to Canada. They are newer to Canada individuals that have great paying jobs with a significant amount of down payment, and they're tired of renting. They've maybe got their permanent residency card and they're just looking to execute. That seems to be the biggest, percentage of the new first-time home buyers. Then we have obviously, buyers that are, they've lived with their parents, they've saved a lot of money. They plan on getting married. That's a big cohort too. They're just tired. A lot of the clients, I hear the same frustration, Santo. Rents are too high. My landlord is now potentially looking to sell. I'm not comfortable paying X amount for rent. And I think I can get a mortgage at relatively the same price that I'm paying for rent right now.
Have you heard? I'm living with my parents and my landlord, I don't want to live with them anymore.
Yes, I have. That's a very good one. Yeah, a lot of people, a lot of young couples that have gotten married, they want to start a family, and factually speaking, a lot of people are getting married a little bit later in life, so they want to jump on that bandwagon, maybe start that family, and sometimes people are not comfortable doing it in the basement of their parents' house.
Absolutely. Okay, so the majority, and we don't have to pinpoint it by percentage, the majority of people applying for new mortgages are first-time home buyers. I see that on my side as far as most of the people I'm working with, the newer calls that we're getting. I see it from also from your side that you're just saying. So what's the size of an average mortgage these days?
It's definitely shifted from, let's say, mid 2020 to 2021. Right now, a lot of the first-time home buyers, it is really diverse, because there's a lot of first-time home buyers that are coming up with a huge amount of down payment. But generally right now, a lot of individuals are looking at mortgages. They're probably around, I would say, 500 to 700,000.
500 to 700,000. First-time mortgage, first time getting out there to buy. And what is that costing these days at the current interest rates?
It's expensive. I can tell you that. I mean, obviously, we all know that interest rates have come up over the past little while. Just thinking about the payments, I mean, depending on the type of mortgage that they're taking, if they're taking a fixed or variable, what that percentage rate is, the payments will definitely be ranging in the upper 2000s to just below the $4,000 mark, or if not in the $4,000 mark. And obviously that's just the mortgage. That's not including property taxes. That's not including maintenance fees and other living expenses.
So it's probably more fair to say the average mortgage for a first-time home buyer today is somewhere between $3,000 to $4,000, maybe even a little bit higher than $4,000. Is
yes,
that accurate?
The higher you get up there in those mortgage amounts, obviously, of course, it goes without saying that the payments are going to be higher. What we like to do with our clients is sort of give them that vision to say, look, this is what your payments are. Because let's face it, Santo, nowadays, people are looking at the home prices, but they're also buying the payment, right? They're buying what they can afford per month. And, you're going through their expenses because we're looking at their bank statement saying, hey, how can we help you cut some costs? But yeah, it's definitely up there. A lot of times when you start adding in all the small stuff, like the little subscription services, you can really creep up to over $4,000 very, very quickly.
Do most buyers, when you qualify them for a mortgage, let's say you qualify them for $600,000 and they've got $200,000 of down payment. We're talking about a first-time home buyer. So you'll say, okay, you could buy for $800,000. That's your maximum you could buy for. Are most of them using their full mortgage amount that they're qualified for? Or are many saying, that's my max, but I'm going to buy for less?
Mm-hmm. That's a great question. I've actually been tracking that. A lot has shifted over the last few years, right? A lot of our buyers right now are looking at home prices that are below their qualification. We're telling them, hey, look, you qualify for, let's say, 1.2. We'll use this example. A lot of them are saying, well, no, I'm not looking to go that high, right? They're looking at that purchase price because they might qualify for it, and they'll say, Anth, can you run the numbers? And I'll give them the payments. They're like, no, we're gonna pull back. A couple years ago, that was a different conversation. A lot of them were stretching their budget.
This is why I asked, because a couple of years ago, conversation was, how can I squeeze a little bit more? But since interest rates started shooting up, it's how can I buy what I want to buy for a bit less?
The biggest conversation we have on that point, Santo, is the property ladder with our clients. Like, this is for most first-time home buyers, that's what they're called, first-time home buyers. It is their first home. They don't see at the end of the tunnel that maybe there's another move for them to build their way up the property ladder, right? And say, hey, we're going to start off small and work our way up to the next property, A lot of them get into the market thinking, hey, I just want to buy this big house that I can stay in for the rest of my life. And for some that can qualify for it, that's a great strategy. There's no right or wrong answer to that. But for some that are looking to figure out a way, it's like, this is your first home, right? It's not going to have all the bells and whistles. Maybe look at something below your price range so that you can maybe afford to save a little bit more money towards the dream home or that next move, right? So these are the things that we're talking about.
Property values over the course of the last year or so have been trending downwards. Have you seen an issue with appraisal? Somebody has a financing condition and the bank sends an appraiser to the home to value the property. Have you seen any kind of change in the percentage of appraisals that are actually coming in at the right price or not?
We've had our fair share of issues with appraisals over the course of the last little while. Yes. So over the past, let's say, year, when home prices were still very volatile, we did. But the majority of those issues, to be 100% frank, are from pre-construction. Are some pre-construction closings.
That was my next question. Go ahead.
I'm ahead of you, Santo. I'm ahead of you on this. A lot of clients that are looking to renew or refinance their mortgage, what we're finding right now is they're having not much of an issue because they've actually capitalized on the appreciation that's happened over the last few years, right? And don't forget, some of these individuals may have bought a home 5-10 years ago. They've been able to ride out that equity and build it. So even if their home values come in a little bit less than what they've expected, it doesn't change the parameters within the deal. Now, are there outliers? Absolutely. But it's pre-construction homes that we're having the biggest issue, because a lot of times when people bought these homes, they bought them in a different market. They bought them with different expectations of, being told, hey, you buy a house pre-construction, it's only going to go up. So they also do
It's
upgrades.
a done deal. It's guaranteed. You'll make money for sure. It's a
only
no-brainer.
There's only 2 guarantees in life, Santo: death and taxes. And that was it. That's what I tell my clients. Those are the only 2 guarantees you have in life.
Absolutely. We've seen a lot of people get in trouble with the pre-construction, trying to close on it. Okay.
But that might be an opportunity for a lot of buyers right now. Because we always get this question, and I'm sure you do. Actually, let me pose you the question. How many times you get phone calls about, hey, do you have any power of sales? Do you have any foreclosures that, that I think I can scoop in and get at a low price?
Yes, I get those calls all the time. And when we're talking about power of sales, I really need to have a further conversation to make them understand that power of sale is not always the deal that you think it's going to be, because you are getting what you paid for. Somebody commented and said, condos or banks will not lend money. They won't give a mortgage on a condo that's being sued. Mm-hmm. Now, I've seen it. It depends on, what's your comment on that? I'm sure you've seen banks giving mortgages on condos that are being sued.
If the client is purchasing a home with less than 20% and they require a default insurance mortgage or default insured mortgage through CMHC, Canadian Mortgage and Housing Corporation, Sagan, or Canada Guarantee, the insurer as well as the lender are required to approve the deal. And what we always do for our clients, is we pick up the phone and we call the insurer and say, hey, do we have any known issues on this particular condo? So that we sort of understand from their perspective what they're seeing, right? And some of them will come back to us and say, hey, there's a lawsuit, there's a marketability issue, there's a reserve issue. So they're the first person that I go to, right? And we have to make sure that the insurer is good with it. So some insurers will say flat out, no, we won't touch this property. Some will say, hey, let's see. At the end of the day, it's got to go through. Sometimes I've had deals where the condo was questionable. We've had to provide all the documentation to the insurer to revalidate that property, say, hey, this is just the case. It's a small issue. It's not a major one. But if it's an insured mortgage, there is more headwinds that the client will be facing if there is any litigation, because the insurer doesn't want to have that. And the lender hears that, then they're not comfortable potentially. There is ways around it. But if you're putting more than 20% down, the bank doesn't care, because here's the reality. If you're putting 20% or more down, that mortgage is going in the bank's books. Now it's up to you and your lawyer to go through that estoppel certificate and, is the client okay with a special assessment on that condo? Are they okay with the potential that those condo fees are going to rise? Because it's no longer between the insurer and the bank, it's between the client and the lawyer. If the lender says, yep, we're good to go, it's up to the lawyer and the client to say, hey, by the way, do you know that you could be facing a higher condo maintenance fee? There is a litigation. There's all these things. And the client says, yeah, I'm good with it. The bank doesn't care unless it's flagged, unless that property's flagged.
Right. So some condos are blacklisted, we'll say, and you're not going to get a mortgage. You got to buy it cash. And others, it really depends on the type of lawsuit going on.
With some of the major banks, I mean, our clientele base is maybe slightly different, but we really haven't had any issues with going to a major bank for a condo purchase that might have, might not be in the best of neighborhoods.
Okay.
Because most banks cannot discriminate on the property, right? They'll discriminate potentially other ways, but they generally don't discriminate on the property. So that's at least from our experience. But as I said, I haven't dealt with some questionable, really, really, really questionable properties. But I think a rule of thumb is when we talk to clients that show us these properties in Toronto that are like maybe listed way below a normal condo, is it a co-op? Why is it listed for like $200,000 cheaper than a regular comparable condo in that area? And chances are it's because they know they can't unload it. There's a problem.
So Anthony, I want to ask you one final question here. There's a ton of chatter out there about current homeowners that are going to renew this year and next year, that they just are not going to be able to afford these payments, that the interest rate is so much higher than when they bought, that we're going to see massive amounts of homeowners having to sell or go under power of sale. They just can't afford it. How do you feel about that comment that people are just not going to be able to afford their new mortgages?
I want to unpack. That's a great question. There's a lot of people that are anticipating this wave of homes to hit the market because people can't afford it. And there is going to be people that can't afford homes as those payments go up. It is.
But do you see it as a market changing issue? I'll give you, I want to relate it to something. Remember the deferral cliff a while back, a few years ago?
Great.
How it was going to be the end of the world. And yes, some people had some issues, but nothing remotely close to any kind of volume that affected the market. That's kind of what I'm getting at. With these renewals, do you think it's going to be so bad that it's going to affect the market?
Fortunately and unfortunately, we have the banks and the insurers and the government, Big Brother, that is really stepping in to make sure that we can keep Canadians in their homes. Much like your point to the deferral cliff, I think we might or already are seeing things in place like the mortgage charter that are, setting out guidelines that the banks have to help clients in these situations. And there's a lot of solutions that are out there for clients with their banks. But I do see the renewal cliff. We call it the renewal cliff, right?
The renewal cliff. Okay.
Cliff. I mean, there's 60% of mortgages haven't seen a payment change.
60% have not renewed yet?
Yeah, we're looking at around, according to the data points, around 60% of mortgages, according to CMHC, haven't hit that maturity date. They're about to renew within 2024, 2025. And a lot of our clients from the ground floor, as I said, this is data that I believe, like, we're looking at it from our perspective right here, GTA, let's say Vaughan. A lot of individuals that might be approaching mortgage renewal, they have smaller mortgages than maybe the people that got mortgages back in 2020, 2021. So are the payments going to be as detrimental to them? Not necessarily, right? Because some Canadians would have gotten a pay raise from their works, right? Or they might have received, I think we looked at Stats Canada, they said 16 to 20% of people got an increase in pay. I'm not saying that that's going to offset, the increase in those mortgage payments, but at a low interest rate where a lot of these Canadians had potentially much lower rates, they were able to pay down so much principal on that mortgage. When they go to renew that mortgage, yes, maybe their payment is going to be the same. Maybe they re-amortize up to 30 years to sort of, take out the blow of that higher payment. I just think, as I said, like, a lot of times it's the mindset that we have as Canadians that interest rates only go down and home prices only go up. All right. Where, I always say to clients, when you're renewing your mortgage, we don't know what the next 1, 2, 3, 4, 5 years will look like. So, I always tell clients there's a few things just to come to your point. If you look at that qualifying rate that we present to the client versus the rate that they're paying on the mortgage, I always tell clients, this is the rate that you should be thinking about, right? This is what the Bank of Canada, this is what OSFI, this is what all the powers that be, the regulators tell us you need to qualify for.
That's with the extra 2% stress test you're talking about.
Right. So don't look at the payment that you're making monthly. I mean, yes, that's the payment you're required to make, but look at what you're being qualified at. And if, you're looking at that payment and you're starting to look at yourself and say, oh my God, that's a lot more than I thought. Think about this for a second, Santo. When we go to qualify a mortgage for a client, The bank is using gross, not net income to qualify that deal.
And you can't spend gross income because you don't have,
but that's
gross income never ends up going into your bank account.
Let's see the comment section blow up on this one. You think about that payment, right? You think about why the banks are doing it and why Canadians themselves are potentially behind the 8 ball. Do we have a spending problem or a saving problem, right? With the fact that let's say you take $100,000 income, you chop 20% for the government to take their taxes out of that, you're left with $80,000. You're making a payment based on your actual net income. How are you supposed to get ahead? If I was actually to qualify a deal based on that income, your actual take-home income, what's deposited in your bank account, those ratios would be way out of line.
But Anthony, it really doesn't make sense though what you're saying. And I know this is the way it's done, but it makes no sense. If my gross pay is $100,000 and you're qualifying me on that, I never see $100,000 in my bank account. I actually have access to $80,000. That's what I could potentially spend towards mortgage, car, living, vacations. That's my actual take-home pay. It doesn't make sense, but I know that's how they do it. And you're right. People get themselves in trouble that way.
I still think the dream of home ownership is alive and well for some, even though the news outlets will tell us it's fading away for a lot. And it is for some. And that's an unfortunate part of what we're seeing happening right now. It literally breaks my heart dealing with a lot of these clients, unfortunately. But we always say where there's a will, there's a way to get this done. We've worked with clients for years on end to try to get them through that dream of home ownership. And, when it comes to the rates and those payments, just to dive off for a quick second, maybe final thought, the US has a longer term amortization. They're doing 30 years. I always think about this question talking to professionals saying, after the events that we've just lived through and are still living through, on the other side of this, when rates potentially come back down, because they will eventually at some point, are we going to see an uptick? We used to be the 5-year mortgage. Are we going to see 10, 15, 20, 25-year mortgages, the terms? Some banks are already starting to offer them. And although the rates are ridiculous, I think what this last little while has taught us is that we need to keep our eyes open. Things have changed over the last couple of years, and so should our mindset. I hope that we see Canadians to sort of look at that and say, hey, what happened over the last little while is not the norm. This is now changing, and we should be focusing on what's to come.
Anthony, I appreciate you taking time to speak with me, with our viewers. And before we leave, can you just tell us a little bit about, you have a family business as I do. Why don't you tell us a little bit about InTouch Mortgage Solutions?
Thank you, Santa, for giving that opportunity. With InTouch Mortgage Solutions, we are family. We're my mother, my brother, myself. We have a few agents underneath us. We all of us have come from the banking background, right? So we all worked for one of the major banks. And we just quickly realized that when you work for a major bank, they're great, they're fantastic, but they're only able to offer clients certain solutions, right? They're not able to offer them all the products that we have access to, right? It's like, I always draw the analogy. It's like walking into a Honda dealership and asking them how the Toyota is.
Yeah.
What do you think the answer is going to be, right?
Honda's
so they're going to sell you whatever they have. Right. Well, as I said, depends on the buyer. You're walking in there, but we work with a lot of our clients to help them add value to the journey, because a lot of them don't know what's going on. They don't know what pitfalls to avoid. They're just chasing maybe just the rate. They're not looking at everything else that can cost them even more money. And sometimes we talk about that and saying, hey, it's about $15 to $20 difference between this lender and this lender, but the opportunities, the differences that are being presented to you in this other product are far superior.
The fine print.
And to pay close attention. Exactly. I think that's the biggest line I would say in life. I was taught, and at 42 years old, I've learned a lot. You get what you pay for.
Absolutely, you do every time. Anthony, really appreciate it. I can attest to the awesome work you guys do, and thank you for supporting our clients, and thank you for taking time to be on the show. We'll do this again. Have an awesome day.
Absolutely. Thank you. You too, Santo.